Okay, so let's do some exercises on allowance for doubtful debts and writing off a bad debt on chapter 14. Now, let's start with exercise number 2. It's quite simple exercise. So what they are saying is they have this much of cash sales, this much of credit sales, and this much of sales returns. And part A, they're asking us to prepare the general journal entry to create an allowance for doubtful debts equal to 2.5% of net credit sales. This is very important because some students might mistake the credit sales with the net credit sales. So what does it mean by net credit sales? We have to take the credit sales for the year less the sales returns from the accounts receivable. And that's how you come up with the $23,000, which is the net amount of money that the accounts receivable is owing us. Now, 2.5% of net credit sales would go under allowance for doubtful debts. So 2.5% of $23,000 is $575. Now, if you have watched those videos that I sent you over sector about how to create allowance for doubtful debts account, you'd know that you have to debit bad debt expense and credit allowance for doubtful debts. So basically, we just record that number into the according journal entries. And that's it for part A. Part B, prepare a balance sheet extract to show how accounts receivable would be reported as at 30th of May 2023. You know that allowance for doubtful debts is a contra asset account or reverse asset account. So it directly deducts from the accounts receivable. And that is why in the balance sheet we have accounts receivable. Remember, we only record the net credit sales of $23,000 less the allowance for doubtful debts of $575. And then we'd have the total of the accounts receivable. Okay, and that's it for exercise number 2. Moving on to exercise number 4. A credit sale of 480 plus GST was made, blah, blah, blah. The customer has made no payment since then. At the end of the period, decision was made, blah, 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 been formed that collapse, and the owner can't be located. So no information about if there's any payment from the time that the credit sale was recorded to the day that the owner can't be located. That means that the whole thing, a credit sale of 480 plus GST, becomes bad debt, 100%. All right. So again, you should know by now that in order to record actual bad debts, we credit the accounts receivable to close it off, and we debit into allowance for doubtful debts and debit into GST clearing. So 480 plus 48, which is the GST, would be 528. This is 100% of the credit sales plus the GST that has become bad debt. Now we put 48 into GST, and then we'd have the 480 for allowance for doubtful debts. Okay, so you just have to memorize the entries for recording actual bad debts and recording allowance for doubtful debts. This part B says post your general journal entry to both the accounts receivable account and the allowance for doubtful debts account in the general ledger. Let's start with accounts receivable first. All right, so here are the entries that record the credit sales the first moment that it was recorded. Now, as you can see here, we credit 528 to allowance for doubtful debts and the GST clearing, and so we have to record that here too. 480 to allowance for doubtful debts and $48 to GST clearing. Next thing is allowance for doubtful debts. It says here a decision was made to create an allowance for doubtful debts of $600 at the end of the previous period, which means that the balance at the start of this period is $600, and that's why we have this entry here. Balance $600. And you know that 480 has turned into bad debts, so we have to record that too. Now we have the balance of 600 as allowance for doubtful debts, but $480 of them has turned into bad debts. So that means that the balance for the allowance for doubtful debts is $120 left. And that's how we have to carry forward that balance to the next period, so that 120 becomes the balance for the next period. Okay. Yeah, we'll go through exercise number 5 too. The only difference from exercise number 5 and exercise number 4 is that the accounts receivable actually paid a part of the amount that they are owing us, partly in cash. And just one note on this exercise. Instead of $40,000, we put it as $1,400, and instead of $20,000, we put it as $2,100. All right, and all of these plus GST. So basically, they are saying that initially the accounts receivable is owing us $2,100, but then they paid us during the year of $1,400. So that means that the accounts receivable is owing us $700 plus GST. So plus the GST, that means that the total balance in the accounts receivable here is $700 plus $70 equals $770. And that is why we have this ledger account here. Okay. Now they are saying that the correspondence received also indicates that only 40 cents in the dollar will be paid, right? So 40 cents in the dollar, that means 40% of whatever they are owing us will be paid in cash. So 40% of 770 would be $308. All right. So what else do we have left? So 770 minus 308, what do we have? 460. Now 460 including GST. So we have to divide it into 11 to find out the GST clearing, and therefore we can find the balance as allowance for doubtful debts. And this is how much, this is how the general entries look like. All right, so the balance went into bad debts. Part of them is cash. The rest becomes actual bad debts. Part B is asking us to prepare the following general ledger accounts to show the receipt of cash from the payable and the bad debts entry, accounts receivable. So let's have a look at this accounts receivable ledger account. Right, we know that we have the balance of 770 at the end of March, and we also know that we have credit into this account. So we also have to record that too here. Debit into bank, 308. Debit into allowance for doubtful debts, 420. Debit into GST clearing, $42. Next thing, allowance for doubtful debts. Just like this in question number 4, we have the balance of $1,000 here. We know that the actual bad debt is 420, so we have to record that in debit side. Initially, the balance is $1,000. Actual bad debt 420. That means that the balance left in the allowance for doubtful debts is 580, and we have to carry it forward to the next period of 580. Right. So the only difference between exercise number 4 and exercise number 5 is this part, cash at bank. Right. The rest is pretty much the same. Down to question number 8, adjusting the allowance for doubtful debts. So what do we have here? So the accounts receivable is owing us $660. Allowance for doubtful debts, blah, 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 decide. All right, so using the general journal, prepare the entry required on 30th of June 2023 to write off the amount owing by Scott Noto as bad debt. So this 660 is 100% bad debt. All right. Now, you should know that how to record actual bad debts, which is here. All right. Credit accounts receivable, debit GST clearing, debit allowance for doubtful debt. So we're pretty much doing the same thing here. So 660 divided into 11, we have the GST clearing, and the balance would be allowance for doubtful debts. Okay, so how about allowance for doubtful debts account, ledger account? So we have Montrose Exports currently has an allowance for doubtful debts of $500 in the general ledger. So we have the $500 in the general ledger as the balance, and decide to increase it to $700 on the 30th June 2023. Now we know that we have the balance of $500, but we also notice that during the year, 600 of them turned into bad debts. So we have to record the actual bad debts here on the debit side of the allowance for doubtful debts. Okay, so that means we have the balance of 500. 600 of them has turned into bad debts. So basically we have the balance for the allowance for doubtful debts as minus 100. And you also read it here. The management wants the next accounting period's allowance for doubtful debts as $700. So how do we, so we have the minus $100 now, and we want the balance at the end of the period as $700. How do we do that? Obviously, we have to add $800 to it. All right, so that the balance, the final balance becomes $700. Now that means that we have to raise the balance of the allowance for doubtful debts by $800. How do we raise the balance for allowance for doubtful debts? We go back to these simple steps. Credit allowance for doubtful debts, debit into bad debt expense. All right, so we credit allowance for doubtful debts and put it into bad debt expense. So bad debt expense by how much? $800. $800. So that is how we have the balance of $700 on the debit side, and we have to carry it forward to the next accounting period. And that is how the next accounting period has the balance of $700. Okay, that's it.